Thanks. I'm Cameron Parry. I'm the CEO of Kolar Gold. I thought if I'm going first, then I'll open with the joke. Our share price. 3 reasons why you might want to consider investing in our stock and in our company. Let me tell you 3 things that we're doing. I've been CEO for 4 months now. Myself and another gentleman took over the executive management and did a capital raise of just under £1 million. And we've been running that for 4 months. We implemented a 3-fold strategy, which ties elegantly into the 3 reasons. We've got a joint venture gold near-term cash flow project in Finland that we've secured in the middle of October. We've got a 50-50 India-facing joint venture in fintech gold, which is an established financial technology gold and silver trading platform that we will be targeting India with in the early part of next year. And we also took a 27% stake in the parent entity that owns that technology. And our main thing, the reason why Kolar sort of existed in the first place, is because of its India focus. And we've got a 22% stake in a company in India that for the last 20 years has been building up a portfolio of assets, primarily focused on gold, but not entirely, that are now at various stages of advancement. Some are at prospecting license level, some are at application for mining leases, and they've got one mining lease. They've got a fully funded economic feasibility study that will be completed next quarter. And on our balance sheet, that's got a value of £3 million. But of course, subject to the EFS being what we hope or think it might be, that should increase. The market knows from the capital raising we did recently that there's around £1 million in our bank account. Our market cap at the moment sits at £2 million. So I suppose the 3 things we're doing are Finland gold, fintech gold, and the primary thing is India gold. There are no competitors for what our Indian gold company that we own 22% of are doing, just because of the state of play in India. All 3 of those are due to be into generating revenues for the company over the next 2 years. So the fintech and the Finland in 2017 generating revenues, and subject to the outcome of the EFS, we will have the first private gold mine, brought online in India in Q4 2018. So 3 reasons to invest. Well, probably only need 2. One is that fundamentally we're undervalued and there's a lot of prospectivity. The other thing is that, in my view, great people make great companies. We've at our core on our board now, we've got Dr. Hanuma Prasad, who's sitting in the back there. He is the business out of India for geology and geological expertise and what he's achieved there. We've got Luke Cairns as the other executive director, who knows how to get the business done in London, and got me as CEO, and I'm just kind of grateful to be here. So, Kolar Gold, the ticker's KGLD. If you can't remember that, it's Kolar with a K. Go long, don't miss out. The share price, I think, is roughly around where we did the placing 4 months ago, except we've now implemented all these things that I just rapidly spoke about. So I think our share price should be, if you ask me, probably through 2p, but it's at around 1.1 at the moment, which is what we did the placing at. Why is it so low? There is some, I guess, disruptive noise coming out of India in the sense that they just took 500 rupee and 1,000 rupee notes out of circulation, and then they were talking about banning the import of gold. But that's, again, the vagaries of the market, because if we've got the only gold mine, or the second gold mine and the first private gold mine in India, that kind of gives us a monopoly. So that puts us in a sweet position. So apart from that, I mean, it's anyone's guess, I suppose. We've built a lot of value over the last 4 months. If you can get that price now, I mean, do it. If they ban gold imports for 2 years and we bring on a gold mine, then we've got a complete monopoly. Just on that, I mean, India is the second largest consumer of gold in the world. They consume about 700 tonnes a year. The one gold mine that they've got, government gold mine produces, I don't know, about 2.5 tonnes. So if we can bring on a gold mine and they're not letting anything else in, that's pretty good for us.
Great to be here on the 7th anniversary of MiningMaven. It's been a great relationship with Malcolm over the years. Presented here a number of times, and it's always been a pleasure. So thank you all for attending today. So 3 reasons. Well, actually, before I get into that, 8-minute pitch. I thought 8-minute elevator pitch. That's a bloody long time in an elevator. So which floor are we going to end up on? So I'll take you on a bit of a journey. So the sort of discussion that I might have with someone in an elevator for 8 minutes. And it's a journey of Ariana's story, of where we started, going back almost 12 years now. It was essentially an idea put together by a group of like-minded individuals to focus on grassroots exploration in a frontier country. We recognised Turkey as a place to be. My background is Turkish, so we had a natural entry point. We focused on what was essentially a rather academic study to look at project opportunities across Western Turkey using remote sensing data sets. We identified a range of project opportunities. We then, in 2003, 2004, we put our foot on a number of very, very good opportunities, and we've started the process over the years of moving those right the way through from grassroots exploration, resource drilling, bankable feasibility study, environmental impact assessment, the whole raft of permitting that goes along with bringing a mine on stream, to the point now that we're on the verge of production on our primary project, Kızıltepe, in Western Turkey. Now, Kızıltepe is not our only project. We also have Tavşan, and it's our intention with our joint venture partners in Turkey, Prosir Construction, to move from Kızıltepe, producing at around 20,000 ounces per year, which is production that we'll be bringing on within weeks now. The mine's essentially built, right the way through to producing at a rate of about 50,000 ounces per year once we brought Tavşan on stream. Tavşan will take another couple of years to bring on stream in that manner. But we've got a whole pipeline of other opportunities and prospects that we're continuing to test. Resource drilling, there's drilling underway already. Zach in the background there has been running those programs for us. So boiling everything down, what makes Ariana Ariana? Really three key things. The commitment that it's taken our team over the years, and with that comes tenacity and focus. So those 3 key words I want you to take away. Those are the 3 things that we've delivered. Thank you. Okay, breaking things down and just reiterating what I've just discussed. We've got 3 key projects in Turkey. The first, Kızıltepe. So the bulk of the company is essentially valued on that, to be honest. Then we've got Tavşan. Tavşan we've only recently completed a scoping study on, so it's within the last few weeks really we've been able to give the market an indication of what that means to the company and its potential value. And then, of course, our joint venture with Eldorado Gold in northeastern Turkey. Sorry, I didn't mention that one in the spiel. So those 3 components of the company are substantial. Obviously, Kızıltepe, the least risky project. The mine is built. We've just got to get the final sign-off, technical sign-off on the tailings dam. Once we've got that, we're in production. As I said, weeks away. Tavşan, the next most developed, certainly we'll be able to bring that on stream within years. And then, of course, the Eldorado joint venture, which is our largest resource, which is over 1 million ounces. Now, we can envisage a sort of growth profile for the company, comprising those various projects, and growing our production base from 20,000 ounces a year on Kızıltepe alone, through to 50,000 ounces with Tavşan, all the way up to perhaps 100,000 ounces if we start adding Sullenbosch. This is per annum.
Right.
So what should the price be? Well, the price right now is valuing Kızıltepe on its own with nothing else. So the rest is there as upside.
Everyone, thanks for coming, and thanks to Malcolm for organising another great event. I'll keep this short. So I'm an executive director of Greatland Gold, and we've been listed on AIM since 2006, and we're woefully undervalued like every other company here tonight. And look, in terms of our outlook, we've been very busy recently. It's been a transformational year for Greatland. There's been significant changes at a management level, and we've taken a much more proactive approach to the existing portfolio of properties, and also we've been much more aggressive about trying to bring on new projects. We recently completed the acquisition of the Havieron project up in the Paterson region. And look, I think there's a few things that are exciting about Greatland at this point. First of all, I'd like to remind people that we have 5 projects in Australia. They're all 100% owned, and they're all in Australia, which is a great jurisdiction to do business that we know very well, and a very easy place to do business on a global scale. We've just completed a drilling program at Ernest Giles, which is a very ambitious, wide-space drilling program there. In Ernest Giles, we in essence control one of the large greenstone belts in Western Australia, and there's not many companies that can say that. We control about 1,000 square kilometres there. We think there's tremendous upside potential and the opportunity there to discover a very large gold camp, and we've just completed that drilling program, which went very well, and we're looking forward to getting those assay results back shortly. We also have a project called the Brummus project, which is down in the south part of Western Australia, near Norseman. We did 4 holes there earlier this year, and we came back with results that the market wasn't thrilled about. But we think one of the things that happened there is 2 of those 4 drill holes missed the targets. We were looking for nickel sulfides there. We've subsequently done some downhole electromagnetics at those drill holes, and we've identified several high priority targets, 2 of which we're going to pursue in the new year. So come January, February, we're going to be drilling those targets, and I think those targets really do look very good. Then also just on the Tasmanian projects, we've also reignited our exploration efforts there. We've just launched a drilling campaign at Warrantina, which we announced a couple of days ago. And finally, the Havieron project, which we acquired this year. We're going to be hopefully launching some field work there in March or April of next year, once we get the native title agreement in place. But anyway, look, we think we've got a great portfolio of projects, and quite honestly, I think if Greatland was listed on the ASX today as opposed to AIM, I think we'd have twice or triple the market cap that we do. The Australian market's been a lot more generous about companies with these types of this sort of Australian-based projects. I think we've got a great set of projects, and I'd encourage you all to have a look. We have a flyer up the back there on the table, so please pick one up before you go and have a good look. And if you have any questions, please come and see me. We have no debt, and we have approximately £800,000 in cash. So we're more than fully funded should the market deteriorate, and we choose to take things slow. We're probably fully funded for the next couple of years, but we're certainly fully funded for next year. And that's a great position to be in. It also increases our ability to do deals and be highly acquisitive, and we're going through a lot of opportunities at the moment. So we need to get the native title agreement in place there before we can put any feet on the ground. At the moment, it's too hot to do any work out there, so we're in negotiations with the native title party and sort of in a little bit dragging that out, because there's no point rushing that. So once March comes around, hopefully we'll get something signed there, and then we'll get feet on the ground in sort of March, April next year. So the market cap's about £3 million today, and look, I don't think that people appreciate the scale of the potential at Ernest Giles. I don't think the market understands that the targets at Brommas are still live and very genuine high priority nickel sulfide targets, and if something actually hits there, there's going to be a lot of value created for shareholders. People are discounting the value in Tasmania. People tend to think of that, that asset's been around for a long time, it's worthless. It's not. In a gold bull market, those assets in Tasmania are worth a significant amount of money to a company. And then I think the Havieron project, which we acquired recently, is just, is poorly understood. That's a hot area at the moment. There's a lot of activity going on in the Paterson region. We've just had Rio Tinto come in next door, take the ground immediately to the north. We've got Newcrest to our west. It's a great area. We've got demonstrated gold mineralisation there. So I don't think, that asset alone could probably carry our current market cap.
Good evening. I'll try and amplify my voice so that the position of the mic doesn't matter, because you can hear me at the back anyway. Red Rock is producing its results for the year to the 30th of June at 7 o'clock tomorrow morning, so I can speak with relative degree of freedom, although not total, because my nomad happens to be present, about where we are. The first thing to tell you is that we have a market capitalization of 2.7 million that has come down from a figure very much larger, as you can imagine, over the last few years. And we consider that our assets are worth much, much more. If we'd been allowed to value some of those assets in the way you used to value assets, a director's valuation, we'd have given them a sensible valuation through the last 2 or 3 years. But we weren't allowed to do that because of IFRS, and I won't tell you which international organization I blame for IFRS, but we're getting out of it shortly. Anyway, we have a small stake in Jupiter Mines that has the Cheapy manganese mine in South Africa, or half of it, and 30% of the shares we ever had in Cheapy we still have, and they have announced a dividend in the last few days, the first distribution, and the amount attributable to us is going to be £530,000, payable in the first week in March, unless that amount is increased, which it could be. And then we expect an interim dividend announced in the spring, which may be a substantial amount also. So we've already got about 35-36% dividend yield on the first final payment for the year just ending in February. And that will imply to you that the £1.4 million this asset is held in our books at is derisory and bears no relationship at all to the true value of the Cheapy mine. Because just as if you're producing iron ore, you want to be one of the top 2 or 3 producers, because then you're essentially the people who make prices, who are cheaper producers, who should be making money regularly, year in, year out. And in relation to manganese, Jupiter is in that position and becoming more so year by year, because over a period of 2 or 3 years, I'd expect that production level to double. So it's spinning off money at a tremendous rate. And to look at our nearest neighbour, our next door neighbour in fact, South 32, which was spun off by BHP, that's up 280% this year, as you may have noticed, is piling up money in just the same way that Jupiter and Cheapy are, and looking for acquisitions. And Mining Journal was in the last few days speculating about whether the increased profile that suddenly Jupiter is encouraging in the press, in the Australian Mining Journal and so on, might have something to do with the fact that corporate moves are afoot. And I'm not telling you something I shouldn't be there, because it's in the Jupiter announcement where they said they're going to do a distribution. So on the Jupiter asset, which is run by people of the very highest caliber and is a world-class asset by any standards, alone, and our interest in that alone, whether on a capital basis with more than 60 years of reserves or on a yield basis, Red Rock is dramatically, extraordinarily, stupidly cheap. And that's my main message today. I can tell you about our other streams of income which we have, one of which is from gold royalties from Colombia, the asset we sold there. We've received so far 2 royalty payments. We expect, based on what the operator there is saying about production next year, and they're a listed company, that we'll have several $100,000 in royalties over the next year from that. Then we have another source of income, which is our participation in wellbore interests at Shoats Creek, onshore Louisiana. We got in there at the beginning of the year when the oil price was at its lowest. Why? Because this is really, really cheap production and really simple. But we think that the management there has improved a little and that we have had our first payment from them. We expect those payments to increase and to become quite substantial over time. So that's 3 income streams already. And we have the gold assets in 1.2 million ounces, which we control in Kenya, where we had to go for judicial review against the government because some people there got greedy and they tried to take it away from our local partner. And we have a dispute with the buyer of our Colombian asset, who didn't recognize one term in the agreement with them, which is if they got listed, they had to prepay the promissory note of $1 million they owe us. And when they should have done it, those shares would now be worth $2 million. And they also quibbled over the terms of the royalty. However, we told them we're taking them to arbitration, and they have come back to us once, and now informally twice, seeking a solution, as has the Kenyan government, and we expect to have resolutions on these issues within the comparatively near future. When we do, that can crystallize value events for our balance sheet. It can crystallize recognition events in the stock market, recognizing the value of our assets. It can also, in the case of the Colombian asset, crystallize immediate cash. So I can think of lots of reasons why you should buy Red Rock. And the best of all of them is that you can read all about it at 7 o'clock tomorrow morning. Thanks. If we were getting £530,000 now, and we think we'll get a substantial amount in the summer, let's ignore the substantial amount we expect in the summer and just put that £530,000 on a 60-plus year asset, which is increasing production on a yield basis, and then come to your own conclusions. Alternatively, you could consider that before all these things happened, we were telling people a few years ago that the asset, our share in it, was worth more than £10 million. And I don't think that's 1.2% in the holder of a 49.9% interest in the mine. I don't think that valuation is something I'd move away from today. In fact, since that was before the mine came into production, producing 1 million ounces, it's now producing over 2 million and has capacity to go to 3.6. I don't think that I would want to keep with that valuation. I'd want to go for a higher one. Additionally, if anyone wants to take it over now, particularly, say, a near neighbor that happens to be a very major company with lots of cash, the only chance to do it is now, because if they wait till we're producing, say, 3.6 million tons, then regulators somewhere are going to look at monopoly implications of that and block them. Okay. So we expect a capital event of either relisting or sale within a foreseeable period. It's written down to about £1.4 million. Because a lot of people out there in the market share the IQ of lift elevators and Brave New World.
Well, first of all, this is my first time here, so I might just introduce the company for those who may not know. Kefi Minerals formed about 10 years ago to focus on particular emerging markets in Africa and the Middle East for mining. We especially were keen to home in on the Arabian-Nubian Shield, which geologically is analogous to Western Australia, as you can tell from my particularly sophisticated accent compared to most of you heathen, I hail from Australia like some of the other people here. The relevance, however, of the Arabian-Nubian Shield is that it's analogous geologically to a zone of Western Australia that 30 years ago was really quite a backwater for the gold industry, and today is I think, the second largest gold producing part of the world. Now, Saudi Arabia and Ethiopia on the other side of the Red Sea are in the heart of the Arabian-Nubian Shield, and it will happen there as well, for a couple of reasons. One is the geology, another one is that it's being prioritised as a sector. The mining sector is actually being revved up, if you like, by the jurisdictions, the governments and so on. In respect of our core competencies, we started with a bunch of ore finders, people from WA, who between them have bought or discovered about 2 million ounces at this moment at a cost of about $10 an ounce. So that's our, if you like, record of achievement. But in particular now, we're homing in on the development of the first cab off the rank, and that's in Ethiopia. So the three reasons that I was asked to focus on will revolve around the particular circumstances of this project in Ethiopia. And that's called Tulu Kapi. Tulu Kapi is a deposit which we bought a bit under 3 years ago. We've completely overhauled. And the three reasons that I would highlight to you. First of all, the company will be in production in 2018, producing 100 to 150,000 ounces, first from the open pit and then moving into the underground. The second reason, rather, is that the financeability of the project is, in my view, quite sort of beyond any doubt, because of a couple of reasons I'll take you through, in particular that the government has got behind it and we've got sufficient competitive tension from a number of parts of the world to make sure that the rest of the financing syndicate's closed off. The third reason is just the numbers. If you look at the numbers in respect of NPVs and IRRs, they scream out at you in respect of the company's pricing in the market, around $20 million of market cap, which is about a tenth of what it will be as it starts up production. So there's plenty of, if you like, multi-baggers in the steps along the way between now and then. So what are the factors underneath the confidence level, if you like, or the disparity between fundamentals and the so-called efficient markets that apply? I was a master's in finance, and I thought the efficient markets theory at the time, as a mere early 20s, was the biggest load of crap that I'd ever read about. But I was a highly sophisticated analyst for a time, and then I was an investor, and then I was a manager, and always in the mining space. And I do think that the efficient markets pricing of assets will be just as efficient when it's multiples of what it is today as it is today. So which is the correct number? In terms of the intrinsics, I would sort of pull back for a minute and say we've gone about this quite methodically. First thing is we established a platform into these particular countries with the best possible partners. In the one country, Saudi Arabia, we've got arguably the first family after the royals as our partner. We're the only group that have been granted licenses for gold exploration in the last few years in Saudi Arabia. That's no accident. It doesn't happen by accident. We're the only people, other than the government-owned company, that have exploration teams running around consistently, tenaciously on the ground in Saudi Arabia. We're really doing the work. In Ethiopia, our partner is the government. That's no accident. The government doesn't partner and put hard cash on the table for equity and debt by accident. This isn't if you like, a speculative venture here. This is a bunch of serious people who fixed a project that needed to get going in Saudi Arabia for one of the main families, and fixed a project in Ethiopia that was stuffed up by a bull market story in London that was way over promoted. And we went in there and repaired it. and most of you probably know that story. In respect of contractors for our development, we've got arguably the best or amongst the best contractors for construction of a plant in Ethiopia on a fixed price lump sum basis and operation of the mine. Those two companies, Lycopodium and African Mining Services, a wholly owned subsidiary of Ausdrill, are leaders in Western Australia and have been both active in Africa for 20 to 25 years respectively. They're both either in the share register or committed to be in the share register. Our financing syndicate, the government's committed to make sure this happens, and because of the travails of the project finance market over the last year, we've admitted Chinese, Turkish and African financiers as well to make sure this gets done. So it will get done, it will be financed, and it will be in construction in the middle of next year. Ethiopia declared a state of emergency on the 8th of October, and most people got scared shitless as to what that meant. And what I can say is that, without waxing lyrical and telling a big story, is that Ethiopia's had 15 years of 7 to 10% GDP growth. And they're absolutely determined. That's not an accidental thing either. And that's going to keep on track. So this state of emergency has been declared to give the Prime Minister the room and the right to replace most of Cabinet, replace most of regional governments, set up independent tribunals for landholder compensation, to root out corruption, because it's the base of the African Union, over 100 embassies there, and they want to keep this development show on the road, and they want to keep their mantle as a model growth country for Africa. So, unlike some state of emergencies, which are, if you like, imposed to embed corruption, this one is imposed to fix a country, to make sure that it's, as it grows through those strains, that it keeps its development show on the road at the highest possible standard.
I'd like to talk about ECR Minerals and why you should invest in ECR. My name is Craig Brown. I've only recently become the CEO of ECR. I started with the company back in May just as a part-time finance director, but I see that the company has a lot of potential. It has a lot of undervalued assets and it's not appreciated in the marketplace. The company is going through a rejuvenation phase. We have a new board of directors. Bill Howe is our chairman, but he only started in June last year. He's a very experienced geologist who's got substantial experience as the head of exploration for BHP, the head managing director of Newmont and Normandy's overseas exploration operations, and he's been responsible for developing several multi-million ounce gold deposits. On the board, we also have Christian Dennis, who's an experienced stockbroker, well respected in the city, and has a particular focus on developing mining companies, taking them from exploration all the way through to production. He has personal experience with a company I was involved in before, which he listed when he was at Hitchens Harrison, which had a small market cap of £5 million, through to, while I was still with it, a market cap of £150 million. We had substantial growth for shareholders, and a lot of the shareholders made over 10 times on their money. And you know, if you invest in ECR, I want you to get those types of returns, and I'll be doing my best to ensure that happens. The last 3 companies over the last 22 years of my working life have all been successful, and all of the companies have put mines successfully into production, and that's what I hope to achieve with ECR. We also have Ivor Jones on the board. Ivor is an experienced resource geologist with international experience. He recently joined us after reviewing our projects in Australia and providing a very favourable commentary on how much potential he thought they had. Ivor is a member of the JORC committee in Australia, which sets the standards for reporting resources. It's great to have Ivor's experience on the board, and I think he'll be great for developing the potential, for reviewing the potential of new projects that we're looking at. In addition, ECR has no debt. We have £400,000 cash in the bank, and we have a clear strategy for going forward. Currently, our focus is on exploration projects in Victoria, Australia. Australia is a very good operating environment. The gold price is in all-time high terms as far as the Australian currency is concerned, and the available resources to work with as far as drilling contractors, laboratories, consultants, the mining industry has been in a bit of a downturn in Australia. A few years ago, you were waiting months to get your assay results. These days, everything's available. The drilling contractors are drilling at almost cost, so it's far cheaper to use drilling contractors than to buy your own drill rigs. So there's a lot of potential for exploration, and the government's in favour of mining at the moment. They want to push this further and push the economy forward through mining. What else can I say? ECR's got a relatively low market cap. Our current market cap today is only £960,000. As I said, we have no debt, and we have £400,000 in the bank. We previously had Yorkville financing us through a form of death spiral financing, but we've got them out of the picture. We have sufficient cash to finance our current drill program. We're reviewing these Victorian projects, and the Victorian projects which we're focusing on, we have approximately 200 square kilometres of area within approximately 50 kilometres of Melbourne, 80 kilometres of Melbourne, and the projects which we're focusing on, they're old mines which were explored or mined during the 1850s to early 1900s. A lot of the grades which these miners were working on were focused on as they used a cut-off grade of about half an ounce. So we're looking at 15 grams per tonne as the minimum grade, and they mine anywhere up to an ounce per tonne, ounce and a half per tonne. A lot of these mines are still sitting there. The pillars are still in place. There's a big halo around the outside. We've done trench samples. We've done soil samples, and we believe there's potential for some quite reasonable sized small open pit mines around these old workings. So our focus is to do a drill program to explore some of these projects and potentially prove up a small open pit mines. And when we're talking small, we're looking at in the region of 200,000, 300,000, 400,000 ounces, and which would give us quite a reasonable mine life. In the Victorian sub-basin, in the Victorian basin, there's been over 2,500 tonnes of gold mined. It's one of the most prolific gold belts in the world. There's been something like 16 companies operating since the year 2000, and two of the larger companies is Fosterville and Costerfield. Recently, the Fosterville complex was sold off by Newmarket to Kirkland for $1 billion. So I think there is real potential to actually develop these projects and to find a real mine. That's our initial focus. We're also looking at developing other prospects all the time, and but we're starting with our initial drill program in January next year, and we hope to have some results out in the first couple of months of next year. Thank you. The company's decided not to continue with drilling on the projects in the Philippines, and we've simply taken our 25% of the joint venture, and we've lifted it at the moment because of the current political situation in the Philippines.
Yes, I'm representing Eurasia. Normally Christian Shafalitsky would be here, but he's busy in Mancha Tundra project. I think we're the only mining company in the room. Is that right?
You're the only
Proudly
one that's
producing something.
Yeah.
And I think and also I think the oldest company I name. And maybe that's not such a good thing, but we celebrated our 20th anniversary just this week. So we are platinum and PGM focused, and producing concentrate for our platinum concentrate from our alluvial platinum mine in West Kitlam in the Ural Mountains since around September this year. and it's a pretty small scale operation in global terms, but cash generative nonetheless. And the operation will probably close down around this week due to inclement weather. But as we get to next year, around March next year, we'll open up again. And all of the infrastructural work has been done. The roadways are in place, the tailings pond and the water process pond is in place. And we have kind of a unique agreement with our contractor there, whereby they basically deliver ore to the top of the wash plant, and they cover the capital and their share of the operating costs. And we take the concentrate from the bottom of the sluice and then upgrade it to raw platinum, which we sell to a refinery in Ekaterinburg. So that's the one project, and we also have another potential company maker, which is the Monchetundra Kolar project, and it's a hard rock PGM project. We've recently announced an EPC agreement with a group called Sino Steel, and they are going to build a 1.7 million tons per annum beneficiation plant there to generate up to 130,000 ounces platinum equivalent per year. So it's a significant operation and certainly a company maker. So yeah, that's basically the Eurasia story. Well, we're entering into the kind of quiet season as the West Kittlin project is sort of shutting down for the season, so we've enough to be going on with for the moment. And we're really pleased with the EPC contract. I should have said that the Sino Steel Group will be providing the capital to build the plant. And so in essence, both projects look like the capital requirements for both are sort of sewn up. And as part of the EPC agreement, Sino Steel provide finance, and also that debt finance sits on their balance sheet until they deliver the plant in working order, which working order means 130,000 ounces platinum equivalent per annum. So. Yeah, well, as a producing asset. So yeah, I mean, the permitting phase is going to take another 6 months probably, and actually building the plant another year after that. So at that point, it's generating 130,000 ounces platinum. So 130,000 ounces times 1,000, it's a huge revenue potential. And I don't think any of that has been factored into the share price at the moment, obviously, with a market capital of about 10 million.
Good evening, ladies and gentlemen. Thank you for coming in this evening. Malcolm, congratulations on the 7th anniversary. I'd like to preempt a question about the share price now, and say that for the same reason you have been quiet for the last 2 to 3 years is the same reasons why everyone's share price is down. It's been a tough couple of years for everyone, and we're all sort of rebuilding from quite a low base, and there's been a lot of pain to get to where we are, and hopefully now that we've experienced the pain, we will have the gain. Ortac Resources, we've listed our name, quite a diversified portfolio of assets. 3 reasons why you should invest: gold, copper and cobalt. We have got gold interest in Slovakia and in the DRC, as well as copper and cobalt interests in Zambia, as well as interest in exploration properties in Eritrea. In terms of the gold side of the business, again, a little bit diversified. You have a relatively stable jurisdiction of Eastern Europe, where you've got infrastructure, electricity, water, people, skills, so forth. But it obviously comes with the challenges of operating in quite a established environment, and the permitting timelines obviously take a little bit longer. And on the other hand, we have investments in gold in the DRC and Eritrea, where it's the other side of the scale, where things can happen a lot quicker. But the infrastructure in some areas tend not to be as developed. Fortunately for the project in the DRC, It is 150 kilometers south of Banro's operations, and will produce 200,000 ounces this year, and they've spent $140 million putting in the infrastructure. So for that particular project, it's all looking pretty good. In Slovakia, we have 1.3 million ounces, most of that in measured and indicated, 873,000 ounces in reserves. Where we're going with that at the moment is we're working towards getting a local buy-in from a local partner, and that will help us move that forward. That's really the only way we can see things moving forward in a rational way in that part of the world. The pre-feasibility study on that project is that the economics are pretty good compared to other parts of the world where the challenges are more severe. This asset would have been mined a long time ago. Low strip ratios, fantastic metallurgy, skilled labour. It really is a remarkable location to be in terms of all those factors. With respect to the project in the DRC, that was the most recent investment we did this year. That particular project, there has been over $30 million spent there in the last 5 years. So for an amount substantially less than that, we acquired 20% or just over 20% now during the course of this year. And there has been substantial interest in that project, particularly over the last couple of days at the Mines and Money. We've had a number of interested parties come and approach us to see what we're doing with that. And the numbers that are being talked about actually probably substantiate our current share price just on that project alone. If what has been talked about is actually going to happen. In Zambia, we've got an interest in a really exciting part of the copper belt, where we believe the ground could host a substantial resource. Certainly, that part of the copper belt, the resources that have been built up over the years are in excess of over 500 million tons. The latest mines to go into production are only about 80 kilometers to the east of this particular license area, which is First Quantum's Trident project. And there's certainly a lot of interest. And where the latest developments on that front is that, fingers crossed, they'll be commissioning the plant next month. It's been a long haul for them, and I think they had a few more surprises than what they expected. There's a small demonstration plant, proof of concept, where they'll be producing copper and cobalt. Why cobalt? Cobalt for me, I think, is going to have a significant run next year. Today, half of the production goes into batteries. I was actually visiting the Cobalt Institute last week down in Guildford, and they're actually quite nervous about the potential squeeze on cobalt with the way the battery technologies are going. All the cobalt producers are currently very happy. Half the cobalt comes out of the DRC. 30% of that is controlled by Glencore. But they're worried that with a price spike that they're foreseeing, that there's going to be substitutes coming in to replace the cobalt in the lithium batteries. So in terms of a diversified portfolio with a diversified metals, that's what we offer. And what we have at the moment, our market capitalization is around about £2.5 million. And the net asset value of, forget about our flagship asset, just the investments, is more than what our market capitalization is. Naughty. I've nearly finished. Thank you.
Hello. I have to start off with an apology. I flew in from Australia fairly recently, so I'm quite jet lagged. So there's no handout tonight. I noticed everybody else had those on the table, but I neglected to include that, so apologies for that. I'd like to start off just before we get on to Dakota Minerals. So I'm Executive Director of Dakota Minerals, an ASX listed company focused solely on lithium. So we're a pure lithium play. Before I get started on Dakota itself, I'd just like to give a reasonably quick rundown on lithium. I'm don't think 8 minutes is really enough for me to talk about lithium. I'm very much a bull on it, but I'll do my best to condense myself. And then I'll get on to Dakota and 3 reasons to invest. Essentially, we are on the verge of a sort of a generational paradigm shift in 2 things. One is the electrification of transport, and the other is the change of the electric grid as we know it, which hasn't changed since Dickensian times. The electrification of transport is something that's well overdue, and again, internal combustion engines haven't really changed appreciably since the turn of the last century. So those 2 things are happening in parallel at the moment. Both of those involve lithium-ion batteries, and that's effectively where we come in. Currently, the lithium market is pretty niche. There's about 200,000 tons of supply and demand of lithium carbonate equivalent globally. There's various projections on where that's going to go, and there has been a lithium bubble fairly recently, particularly on the Australian Stock Exchange in that regard. But it's certainly a very solid supply-demand story in years to come. So we've got 2 sort of once-in-a-generation things happening there. I would take a bet with anybody here that you are going to be owning an electric vehicle. Some of you already do, actually, Michael. Own an electric vehicle by 2025. Next year is going to be the year of the affordable electric car. There's a number of different models coming out. They will be in the order of 30 to 35,000 US. They'll have a range that most people consider acceptable, 200, 250 miles. In addition to that, we've got the stationary storage, which every year seems to be following Moore's law, and is becoming cheaper and cheaper. We've just had the Powerwall 2, which is packing more and more energy into the same battery, and is basically getting cheaper and cheaper. So those 2 things are happening in parallel, which makes for a very attractive market for lithium. In particular, lithium in Europe, which is why we're focused on Europe. We're tracking 9 mega factories which are being either already operational, they're being constructed, or they're planned for Europe. When I say a mega factory, I mean a large factory that's going to be building lithium-ion batteries, focused on EVs, electric vehicles, focused on home energy storage, even e-bikes. So we've got a pretty compelling story in Europe. They already consume a quarter of the world's lithium, and they produce around about 1 or 2% of the world's lithium. Very keen to secure, I guess, self-sufficiency in that regard. So that's basically the story on lithium. It's a pretty compelling story in years to come. In Europe, we've got Germany, who's going to ban the sale of fossil fuel cars by 2025. Netherlands as well. Norway, if you go there, every 4th vehicle you see is an electric car. So Europe is really the place to be if you want a good exposure to the lithium market. So on to Dakota Minerals. We formed Dakota with a little bit of help from our friends at Ariana late last year. We've been operating for just under a year now. We started off with an asset in Australia. We basically developed that asset, defined a resource in a very short space of time, have just completed a deal with Pilgrim Minerals, sold that for 8 million Aussie dollars. That has enabled us to move to Europe, which is where we wanted to be. We'd already raised 13.5 million Aussie dollars to enable us to shift to that part of the world as well. So we now have cash in the bank once we get full payment from Pilbara of just over 20 million Aussie. So we have a pretty significant cash position for a junior. We secured a dominant position in Portugal. Portugal is currently the only producer of lithium in Europe. All of it goes to ceramics. We plan to change that, so we've got what we think is the best position for lithium in Portugal. We have a very compelling asset out there. So effectively, I guess if we look at 3 reasons to invest in Dakota, the first thing I'd say is right place, right time. We are in the right market for it, which is going to be Europe, exposure to the mega factories. And it's the right time because lithium, after the bubble that's happened in the last year or so, is going to be a very compelling supply-demand story from here on in. We have access to great infrastructure there as well. We're very close to the port of Porto. We have sealed roads going all the way up to site. We have power there as well. So right place, right time would be my first takeaway. The second is the project itself, Cepeda, which is our main project. We have other projects dotted around Portugal as well, but Cepeda is going to be the main sort of flagship asset going forward. We've only drilled one phase of RC drilling there so far. We've already got what I would call world-class lithium results. We have 74 meters at 1.54% lithium oxide was our standout result. That is really, truly world-class. That's enabled us to accelerate into phase 2. So we're currently drilling phase 2 there. We've got 3 rigs operational. So I guess the quality of the project is my second message. Right place, right time was the first one. The quality of the project would be the second. It's a petalite project. It's not a lithium mica. It's not a clay. Petalite is effectively the same as spodumene. So it's a lithium aluminium silicate. It's very simple to process. So we've got high grades, good widths, simple metallurgy. So it's a quality project. So that would be my second takeaway. The third is we have a very good cash position because the market was very kind to us in the last year. So we were able to raise a significant amount of cash. We have had the sale of our Australian assets as well. So we are able to do things very quickly. So things are going to happen very quickly at Dakota in the next couple of years. We've already started our scoping study. We started our environmental impact assessment as well. We aim to have a resource out in Q1 of next year. We aim to have our feasibility done by the middle of 2018, and we aim to be in production towards the end of 2019. So we are aiming to be, I guess, in prime position to capture a section of that lithium market in 2019. That's it. Thank you very much. Absolutely. Yes. We're actively looking at that. We are looking at various places for a dual listing. I'm going to preempt Malcolm's question about low share price, because in the last year we've seen a bit of a roller coaster ride, and we've gone from a market cap of a few million to 85 million and back down to 20 million. Now 20 million is basically cash backing. So that's your value proposition there. We're sitting on a quality lithium resource in Europe, and we're trading at cash backing at the moment. I think that reflects an understanding of what lithium means to Europe and what lithium will mean to Europe in the next few years from Australia, which I think is limited at this point. So we are absolutely searching for alternative listings which will give us exposure to probably the European investor more than anybody else. So London is certainly something that we're looking at. For now, we're ASX listed. We're certainly looking at other options.